Hello everyone, my name is 𝗪𝘆𝘆, Assistant Manager from iFAST Research Team. It is the time of the year again for the annual update of our recommended funds list. Our research team has been publishing the recommended funds list since 2001 to help investors make informed investment decisions. Given the wide and increasing variety of funds available for investors, we hope this list can serve as a good starting point in building a well-diversified portfolio and make investing a less daunting task for new and seasoned investors alike. Our recommended funds span across equity and fixed income asset classes, covering global, regional, single market and sector-focused strategies. The list is updated annually to ensure that our recommendations remain current and relevant for investors. For the 2023-2024 edition, there are a total of 46 recommended funds that have demonstrated their ability to deliver strong and consistent risk-adjusted returns relative to their peers. In this video, we highlight the changes made to the equity section of the list. Within the 46 recommended funds featured this year, 33 of them are equity strategies. Following a challenging landscape for equity markets that led to greater performance dispersion, we have made several changes to our recommended equity funds. This includes 10 fund changes in existing categories, 1 fund addition to an existing category, and the addition of 4 new categories. We believe tough times have allowed capable fund managers to showcase their ability in delivering superior returns for investors. The first notable change in the 2023-2024 edition of the list is our recommended fund for Japan, our favorite equity market, to the eSpring Investments Japan Dynamic. After decades of very low interest rates in Japan, we believe the case for policy normalization has strengthened as a result of higher inflation. We see this as a positive for the Japanese equity market, especially value stocks. We also reckon that an unhedged share class would enable investors to capture the upside from a stronger yen as the BOJ policy normalizes. Our recommended fund, eSpring Investments Japan Dynamic, is value-oriented. This positioning, in our view, will be an advantage moving forward. On a sectorial level, the fund holds sizable allocations in consumer discretionary, industrials, and financials. Over the 3-year horizon, the eSpring Investments Japan Dynamic has significantly outperformed its peer group. The fund has also exhibited superior risk management in the longer term, with a maximum drawdown substantially lower than peers. We think this is a testament of the fund's managers' strong selection skills. Next, persistent inflation and the new regime of higher for longer interest rates in the US suggests that a value strategy is not only back but also here to stay. Coupled with relatively undemanding valuations compared to growth stocks, we continue to expect stronger performance from US value-oriented equities. In addition to the core equity US category, we chose the JP Morgan Fund's US Value for its value-style biased portfolio of US companies and better performance relative to peers over the longer term. The team's investment philosophy emphasizes on investing in high-quality, conservative companies with relatively stable patterns of earnings that trade at attractive valuations. The fund's largest sector allocations are in financials, healthcare, and industrials. The JP Morgan Fund's US Value delivered better returns relative to other US value strategies with a track record of at least 3 years over a 5-year horizon. The fund's risk management is also decent, with maximum drawdown comparable to its peers. Next, an investment area that has stood out for its resilient return profile, regardless of the economic cycle, is none other than the infrastructure sector. Infrastructure companies provide essential, non-discretionary services which benefit from inelastic demand and translates into steady cash flows. Looking ahead, the infrastructure sector is set to benefit from massive policy support globally, given the need to replace and upgrade aging infrastructure as well as the global drive to decarbonize the entire economy. We opted to include the FTGF ClearBridge Infrastructure Value that holds 30 to 60 listed infrastructure securities involved in electricity, water utilities, toll roads, airports, rail and communications in both developed and emerging markets. The fund has recorded outstanding returns relative to its peers over the 1-year, 3-year and 5-year horizons. This, however, came alongside a larger drawdown, suggesting a greater appetite for risk vis-a-vis peers. The last notable change to our recommended funds list is the addition of 3 new single markets, which we believe would appeal to investors seeking a dedicated exposure to emerging markets with strong growth potential. The first single market is Brazil. We reckon Brazil equities will continue on their solid performance, supported by various positive factors such as a supportive commodities outlook, ongoing rate cuts, and cheap valuations. The JP Morgan Fund's Brazil Equity is a splendid fund that invests in a high-conviction portfolio of 25 to 50 Brazilian equities. The fund boasts healthy risk-adjusted returns compared to peers, making it a worthy inclusion into the list. The second new single market is Indonesia. The largest market in ASEAN, a region that we like, Indonesia is a beneficiary of a supportive commodities outlook. Our fund pick is the Fidelity Indonesia, which pursues a balanced approach to stock selection, seeking to identify opportunities across various stages of the industry life cycle and regardless of the sensitivity to business cycles. The fund has shown higher returns over the 3-year and 5-year horizons in comparison to peers, though with a slightly higher drawdown. The third new single market is Thailand, which is also one of the key markets in ASEAN. The Fidelity Thailand is a fine choice for investors to gain exposure to this market. The fund is managed by the same portfolio manager as the Fidelity Indonesia. Over a 5-year horizon, it has demonstrated decent returns with a slightly lower drawdown compared to peers. Overall, for investors who are finding it hard to make a decision or are new to investing, we hope that our recommended funds list can serve as a good starting point. In choosing the funds that make the list, we place strong emphasis on long-term performance track record, which we believe is the recipe to a successful investment.